Disclaimer. All contents, ideas, opinions and information shared or implied herein are for informational and educational purposes only. Hello everybody. Welcome to Sunny the Eggman YouTube channel. In this video, we will be revealing on the recent development for First Reit and the investing strategy on this stock. Before starting, please help to share and subscribe this channel, as your support is our biggest motivation to continue on producing quality contents. Back to the topic. First Reit, SGX trading code, AW9U, is listed in Singapore since 2006 and it is the first healthcare real estate investment trust in Singapore. Its manager, First Reit Management Limited, is 60% owned by OUE Limited and 40% owned by OUE Lippo Healthcare Limited, OUELH. The portfolio for First Reit includes 16 properties in Indonesia, 3 properties in Singapore and 1 property in South Korea. Most of the properties are hospital and healthcare-related assets. Now, let us briefly explain about what happened to First Reit in the past 1 year. In June 2020, PT Lippo Karawaci Tbk, Lippo Karawaci, the main tenant for First Reit in Indonesia, announced that it will undergo restructuring for its lease with First Reit due to COVID-19 material negative impact. The share price dropped by 21%, from 80 Singapore cents to 63 Singapore cents as of the 30th of June 2020. In July 2020, First Reit issued a profit guidance which indicates its expectation on significant drop on First Reit distribution per unit for first half 2020 by 40% to 50% as compared to 2019. Subsequent to this announcement, the share price for First Reit further dropped to 50 Singapore cents as of the 31st of July 2020. In November 2020, First Reit announced their restructuring plan for master lease agreements on Indonesian hospital assets. Based on the announcement, the proposed rent structure indicates significant deduction in base rental from 80.9 million Singapore dollars to 50.9 million Singapore dollars. Also, the base rental is payable in IDR instead of SGD, which causes foreign currency exposure risk to First Reit. Some good points worth mentioning in the proposed restructuring plan include higher base rental escalation, higher security deposit and change in variable rental computation. Based on restructuring plan, variable rental is based on 8% of preceding financial year hospital gross revenue and the total rental payable is based on higher of base or variable rental, asset by asset basis. This gives First Reit some opportunities to earn higher rental if the underlying assets are performing good in future post-COVID-19 pandemic. The share price declined to 38 Singapore cents, another significant drop of 24%, as of the 30th of November 2020. In December 2020, First Reit announces a massively dilutive rights issue at 98 rights units for 100 units at 20 Singapore cents per unit. This refinancing exercise is mainly to repay part of the 2018 secured loan facilities, of which 196.6 million Singapore dollars is due on the 1st of March 2021. The share price dropped to 21 Singapore cents as of the 31st of December 2020. In January 2021, it was announced that the portfolio of First Reit properties is revalued at 939.7 million Singapore dollars, representing a decrease of 401.1 million Singapore dollars over its book value as at the 31st of December 2019. The valuation is taking into consideration of the restructuring announcement. In April 2021, the annual report for financial year ended the 31st of December 2020 is released and the financial result displayed a significant decline as expected. On top of that, the net asset value per share decreased from 99.64 cents to 49.94 cents, mainly due to significant decrease in valuation for properties. Also, the earnings per unit dropped from 5.74 cents in 2019 to a loss of 44.33 cents in 2020. Recently in July 2021, First Reit announced the divestment of Sarong Hospital and entire shareholding interest in Kalmor, Korea, Limited. Sarong Hospital is a 6-story hospital with 1 basement level located in Yosu City, South Korea with land area of 2,142 square meters and gross floor area of 4,982 square meters. The property is First Reit only property located in South Korea. The net proceeds from the property divestment would be approximately $4.3 million United States dollars and may be used to fund potential acquisition opportunities, repay existing indebtedness and/or fund general corporate and working capital needs of First Reit. Now we will be discussing on the investing strategy for this Reit stock. The NAV for First Reit is amounted to 0.4994 Singapore dollars as at the 31st of December 2020 and the stock price is trading at 0.265 Singapore dollars as of the 15th of July 2021. Even though it looks like an undervalued stock at first glance, you would need to consider more details and ongoing development before buying this stock. First of all, there is a significant drop in net profit from 48.9 million Singapore dollars in 2019 to net loss of 352.4 million Singapore dollars in 2020. This is mainly due to the restructuring plan in the main master tenant in Indonesia. Next, its net debt to equity is double up from 0.57 in 2019 to 1.165 in 2020. This means that this Reit is highly leveraged on its debt. 1.165 times of debt is considered highly geared and it imposes higher risk to investor as in the event of liquidation, investor equity holders are last in line to get back their money as the company needs to repay creditors include borrowers. In terms of dividend yield, it dropped from 8.39% in 2019 to 6.26% in 2020. Based on the overall financial results, it is clearly indicated that First Reit was not performed well in 2020. This has collectively resulted from COVID-19 impact and high reliance on master lease with main tenant in Indonesia, which forced them to restructure their leases given bad financial condition of Lippo Karawaci. To add on, massively dilutive right issue in December 2020 resulted in loss of confidence for investors and the future outlook for this Reit remains vague. Hence, we would consider this Reit as high-risk investment due to bad financial results in past year, exposure to foreign currency risk, risk of right issues and risk of underperforming portfolio. However, given the share price now is the lowest since 2008, you could allocate a small portion of your portfolio that you could afford to lose and invest in this Reit, hoping that the future performance for Lippo Karawaci will improve post-COVID-19 pandemic. As we all know that high risk high return, this Reit might have good capital gain if it could survive post-COVID-19 and strengthen its diversification portfolio on its tenants. Please bear in mind that the minimum holding period for this Reit is 1.5 to 2 years given the COVID-19 situation in Indonesia is still at alarming level. First Reit Management Limited, as manager of First Real Estate Investment Trust, will be announcing the unaudited financial results of First Reit for the half-year period ended the 30th of June 2021 after close of trading on Thursday the 29th of July 2021. Hope you can have some valuable insights on First Reit after watching this video. Do comment and share with us your thoughts on the above points. Stay tuned and remember to share, like and subscribe our channel. I'm Sunny the Eggman. Goodbye.